My name is Jake. Welcome to the channel. I want to talk about the golden question every dividend investor asks. Whether you're new to investing or you've been a dividend investor for years, everyone has asked this question, and that is, are dividends too good to be true? And this kind of ties into, do dividends even matter? Now, this can be a topic that can spark a lot of emotions, so I'm going to try to take a level-headed approach and a rational approach to talking about this, but I just want to warn you that I do have some pretty hot takes here. But once again, if you're new to the channel, my name is Jake. I retired from my 9-to-5 job here at the age of 37 here in 2023. I'm now living off of my dividend portfolio in what's called Barista Fire. I work part-time, but I also live off of the dividend income that my portfolio generates. That's what you see here on your screen. This is my M1 portfolio. I have a basket of stocks and ETFs that I am currently living off of. So the golden question, are dividends too good to be true? Now, I know that we've all been disappointed at one point or another in our lives. When we think about, how things were supposed to be and then they ended up being entirely different, right? For example, when I was single on Tinder and I would see this girl and, I'd see her face and her picture and she looked great. And then we would meet in person and then she would look nothing like her picture. And it was just like a total disappointment. Or that one time that, the Prince of Nigeria emailed me saying that, he was going to give me his fortune for a small fee. Or, that one time that I went to Taco Bell thinking that this time would be different. Well, the answer to the question, are dividends too good to be true? Well, it depends. When you're new to investing and not quite sure what to focus on, it can be difficult to not let your emotions get the best of you. Sometimes when the market is red and you have to just sit back and just take the beating and remember not to sell, and that beating could look a little like this. Oh my gosh, the MVW. Oh, I outdid myself this time. So let's first start by seeing the other side and let's read a comment around why dividends don't matter. So I got this on one of my videos here that I made a couple of weeks ago, and the comment said here that dividends are not the answer. Wall Street drops the stock price by the same amount of the dividend. When a stock pays a dividend, you actually made nothing. A $10 stock drops to $9 if it paid a $1 dividend. So your $10 if paid, as a dividend or not, it doesn't mean anything. You don't gain anything. Well, that dollar is real money. That's money in your pocket minus taxes, right? So the return is real. That dollar is real. The question whether it would be more productive to have the business retain that dollar to generate more, revenue in the future, thereby increasing its valuation. Yeah, sure, that's an argument, but that dollar is still a return, part of the total return. And if the business is able to continue generating another dollar, right, in revenue, so that they can pay another dollar or $1.10, next year, that for me as a dividend investor, someone who focuses on total returns, and the dividend is part of the total returns, I don't personally see a problem with that. And one of the things that you have to be careful with, by saying that Wall Street drops the stock price by exactly the same dollar, yes and no in the short term. In the long term, when you look at that, when you look at stocks, once they go ex-dividend date, they don't always drop exactly one for one. Yes, it's true when the company goes ex-dividend date, yes, that money is leaving the balance sheet, thereby becoming, it's gone. The company has less cash, thereby it's worth less. That's all true. So everything you're saying there, I agree with and I can understand, but there's a little bit of nuance here that I want to go into. So first, let's take a deeper dive into why some people are not a fan of dividend investing. The main argument of why dividends are not important or they don't matter is that there's no empirical evidence that dividend stocks will outperform a stock that doesn't pay a dividend. So thereby, it should be irrelevant whether a company pays a dividend or not. And you should not pick one investment over another based on if the company pays a dividend or not. So before we get all the dividend haters in the comment, I want you to know that I agree with you on this, that statement is actually factually true, assuming that we live in a perfect world. However, my point is, as we know, life is full of nuance and we do not live in a perfect world, and that the world is chaotic and irrational. And so let's dig a little bit deeper. So I do want to say that most people, when talking for or against dividends, dividend investing, generally are very one-sided. And generally people only recite talking points that they heard from someone else. It's kind of like with politics, depending on, politics or religion, depending on where you get your information, your opinion of that topic, in this case, dividend investing, may be completely different from someone else. So obviously this can cause a pretty heated debate between people who are for or against dividend investing. So if we were to say that dividends don't matter based off of empirical evidence, which is focused on historical backtesting, I can understand that. I can get on board with that. I can agree with that. However, if there's someone saying that dividends don't matter, and they also say that if you invest into dividend stocks or ETFs, are wrong as just a pure blanket statement without nuance, I'm sorry, that person is just being a self-righteous troll. So let's think about this rationally with a few other examples. I want to kind of make this a little bit more tangible. So let's use this example with other areas of our lives. Let's say based off of empirical evidence, we know that exercising and eating a well-balanced diet is the most optimal way to stay healthy. As a blanket statement, I think most people can agree with that. It's empirically proven. Okay, that's the best way. Now, despite knowing this, I still stuff my face with pizza and the occasional Taco Bell, which I always end up regretting. So why do I do this if I know that the most optimal way to eat and to live healthy is to not do that? The simple answer is, it's because I want to and I enjoy it. So now let's replace eating with investing. Why do I invest into dividends or dividend stocks and ETFs when I know it's not the most optimal way based off of historical literature? The simple answer is because I want to and I enjoy it. Now, that's obviously oversimplifying it. The fact is, it supports my goals and investing strategy. Like with anything else, people can have strong opinions. The thing is, with those people who recite talking points like dividends don't matter or they're irrelevant, are just being ignorant to the real world. The challenge here is when you overgeneralize and use a statement like dividends don't matter, it can be used to provoke emotions. Now let's shift gears here for a second and let's understand how businesses can reward shareholders. Now we talked about dividends being part of the total return. That is one part of it. So there's actually two main ways that a business can reward shareholders or create value. The first way is to increase the valuation of the stock, of the shares, okay? So this can be done by growing their earnings per share or their free cash flow, and this comes from increased productivity as well as share buybacks. So the more valuable the shares, the individual shares of the business, that is a way that the company can reward you as a shareholder. The second way is through dividends, right? And in the simplest form, in order to unlock shareholder value, you either have to sell shares to raise capital or have the company offer you a dividend or a distribution. Those are the two ways to really unlock shareholder value. Now let me talk to you why I chose dividend growth investing. With just focusing on growth stocks, you have to be right twice. That means you have to buy and sell at the right time. With dividend stocks, you don't have to get both of these right. It sure helps if you buy at the right time, but you're still getting that dividend income, assuming that we're talking about businesses that are growing their earnings per share, their free cash flow, and becoming more productive and growing their dividend. I'm not talking about dividend stocks that are stagnant and going out of business. I'm talking about businesses that are growing. So we know that dividends are part of the total return, and it's how companies can reward shareholders is by paying a dividend or distribution. Now, going back to the original comment that I shared earlier, that the share price goes down every single time the company pays a dividend. Well, in theory, yes, that's absolutely true. Let's take a look at an example of Procter Gamble. Procter Gamble has been paying a dividend for over 60, I think 7 years. It's a dividend king. And if you look at the historical chart of Procter Gamble, the company, the stock, the valuation has gone up despite the company paying a dividend. So this business is becoming more profitable. It's growing. They're growing their earnings per share while still paying a dividend, money that is leaving the balance sheet. Okay. So if we just look at here, just as an example, the comment was Wall Street reduces the price of the stock by the exact amount of the dollar. Now, I would be careful by using language like that because the stock market is irrational, okay? Especially in the short term. In the long term, it's more, you see more a reversion to the mean historical norms, but anything goes in the short term. But you look at this, in some cases, once the dividend goes ex-dividend date, you can see that the stock does briefly drop. And in some cases, it drops even more. And in some cases, the share price actually increases. You know, right after the ex-dividend date, the stock rose along with the rest of the stock market, right? And you can see here that you're getting a basket of both. You're getting it when it drops and when it goes up. And so I guess the point that I'm trying to make here is that blanket statement of Wall Street drops the share price by the exact amount. Well, yeah, maybe for a day, maybe in the short term, but how do we generate value? How does a business generate value? Through increasing its valuation, through earnings, growing their earnings per share, and by paying dividends to shareholders as part of the total return. So to use the example of Procter & Gamble, now I know that this is a very high quality dividend stock. You know, not all dividend companies are created equal, just like not all growth companies are created equal. So this is a little bit of a cherry-picked example because this is one of the best dividend stocks out there with the greatest track record. But I want to show you the power that dividend stocks can have over a long period of time. If you looked at Procter & Gamble's historical performance since the 1993, it doesn't go back all the way to the 50s when they first started paying a dividend. But if you look back here, you can see over the last 30 years that Procter & Gamble has actually outperformed the S&P 500, which is remarkable. Now, this is just the share price. This is not even including the dividends. Now, if we were to update the chart to show with the dividend, you would see here that the total return of Procter & Gamble has actually outperformed the S&P 500 over the last 30 years. Now, dividends, yes, I'm sure every time they paid a dividend, as that cash dividend was removed from their balance sheet, yes, in the short term, the price was reflected in the stock, but over the long term, as the company becomes more productive and as they grow their earnings per share, that's really what you want to focus on. And when you get a blanket statement like dividends don't matter, it can be a bit triggering, especially to dividend investors who understand that that's a provocative statement because it's very nuanced. It's not that simple. It's kind of like when you go on the major media news outlets and you read the title of the article and you're just like, wait a second, that was kind of clickbait. Well, that's not exactly what happened. So it's important that you look beyond just the statement of dividends don't matter, or that you dig a little bit deeper and try to truly understand what's going on. And I want to repeat again what I said earlier in the video, that when people say that dividends don't matter, what they're really referring to is that you shouldn't pick one stock over another just because of the dividend. You should focus on an investment that's going to give you the highest or generate the highest total return. And as we learned in this video, the total return is part of the future valuation through earnings growth as well as through dividend payments. Those are all part of the total return. So whether a company pays a dividend or not, the argument here is that you want to focus on investments that will yield the highest total return. And at face value, I agree with that. So before you get overheated in the comments and type why I'm wrong or why I'm right, understand that investing is personal. Understanding that not everyone has the same goals, time horizon, or strategies, or even emotional fortitude to withstand bear and bull markets. For me personally, dividends matter. They're part of the total returns. I mean, look at this. This is actual footage of me this holiday season. So there are a lot of things that you can do wrong when you're new to investing and you're focusing only on dividend stocks and ETFs and you're not sure what you're doing. If you want to learn more about what most dividend investors get wrong, I'll have a video pop up in a second and you can watch that video next. Thanks for watching, everybody. And remember, be nice in the comments.
Please subscribe. Please subscribe.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.